tell me a little bit how we are different in Nevada than maybe some of our states adjacent.
Ooh, very interesting. So here in Nevada, and that's probably one of the biggest questions that I get and that we get is, well, what's going on with Nevada? Why are we the way that we are? And I just came from this other state, and it didn't seem like things were the same that they are here.
This is Las Vegas Real Estate Now with local real estate expert Harvey Blankfeld.
One of the main things is there's a way in which insurance carriers or companies, they're able to kind of market their rates and kind of change their rates. So here in Nevada, we have what's called like a prior approval type of system.
Right.
Basically what that means is all of the rate increases have to be approved by the Department of Insurance.
Right.
So there's this regulating body, and they're the ones that say when and how much you can go up or you can go down.
Right. You preemptively have to get approval before you can change a rate.
Prior approval.
Right.
Yeah, prior is the operative word.
Right. And so in other states, I'm guessing that's not the case.
It's not, So I grew up in Utah, for example. In Utah, it's very different. It's called a rate and file state. Okay, so different just word. All it means is you set the rate as an insurance company.
Right.
And then you file it with the state.
Okay.
Every state has a Department of Insurance.
Right.
They all have a regulating body.
Right.
It's all there. It's just the cadence at which they then propose the rates and introduce them.
So I would say that Utah is a little more of a free market when it comes to insurance.
And that's 100% right. And so there's definitely some pros and cons to both, right? The one thing, and you touched on it, nailed it on the head, was when you have a rate and file state, it's the market that kind of dictates, okay, I'm going to come into the market with this type of home product, and this is the premium I'm going to give.
Right.
I have to be competitive.
Right, yeah.
And so it lends to, yes, there's maybe some more like volatility in rate changes and frequency in rate changes, because the companies can come in and just say, hey, from 1 week to the next, hey, we're going to make this change in a good way or in a bad way.
Sure.
But they have to also be cognizant of what everyone else is doing because they can respond.
Yeah. That's, and here, so Nevada's saying to you, listen, we want you to justify this change. And we want to know before you make it. And so you have to come to them and say and justify the change. We talk with Rick Senemy from Equity Title, and they deal with the insurance division here as well, because their rates are approved by the insurance division preemptively as well. And so I've heard this before from him from a title insurance perspective. But it's interesting that all insurance is that way. The other thing is that we seem to be, I don't know. My son just went to school in California a few years ago, and his auto insurance there in Southern California was less than it was here in Las Vegas, which shocked me.
Right.
I mean, but so how do we rate? How does Nevada rate in terms of auto insurance?
Oh, okay, great question. And so I think that consistently, specifically with auto, not so much with home, but with auto, we're consistently top 5 worst states.
Wow. Is that because is that because we have a higher incidence of accidents, or is it because we have a higher incidence of attorneys seeking higher judgments?
So yeah, that has a big part to do with it, right? We don't have the $1 billion. We're not in Tornado Alley.
Right.
We don't have the natural disasters of fires like in California. We don't have hurricanes and things like that. So what are we paying for?
Right.
Here in Nevada, if you were to just drive down the 95 or the 215, the chances of you seeing a billboard for all these personal injury attorneys, it's pretty much 50-50 between them and casinos. Right?
Yeah, that's fair.
And so, like, whether it's the shows or the restaurant.
I think the attorneys are winning.
And you know what? I think so, too. And so what you're kind of talking about, there's a buzzword for it.
Okay.
It's going around right now. It's insurance. It's called social inflation.
Okay.
So everyone kind of has an understanding of like what general inflation is, right? It's the cost of goods and services going up. Okay?
Right.
It's dictated by exports, imports, economies, things like that.
Supply and demand.
Supply and demand, 100%. Right. Yep. And so social inflation is basically how inflation is surpassing the general inflation rates. Okay. So, and that's typically tied directly to the claims and litigation that is going on in a certain city town economy.
Right.
Okay. So here in Nevada, we lead in a couple different things, right?
Things we necessarily don't want to lead in.
Exactly. So not in Stanley Cups, right? We got freaking Florida Panthers.
Right.
So, but what we do lead in is we lead in like uninsured or underinsured motorist claims.
Yeah.
We're a party town, at least here in Vegas.
Yep.
And so we got a lot of visitors that are coming in, and they're rental cars, and
they think it's bumper cars out there.
It's bumper cars out there, yep. And then but couple that with the amount of personal injury law firms that we have here, that litigation is what creates kind of that social inflation. And that's what causes at least the claim rates or the cost of those claims to go up, which means as a business, the insurance companies, they have to account for that.